Most people wait too long to start investing. They put it off, thinking there will be a better time, a perfect moment. But the truth is, the best time to start was yesterday, and the next best time is right now. Here's what consistently saving just $100 a month can really do for you over the long term. It's a small amount, but its impact can be truly staggering. Picture this. You just got your first job, maybe you're still in school juggling classes and a part-time gig, maybe you're just starting out on your career path. And you're thinking, $100 a month? That's barely anything. It might cover a few coffees or a dinner out. Why bother even trying to save such a small amount? But here's the thing nobody ever tells you, or at least not loudly enough. Time is your superpower when it comes to investing. It's the most valuable asset you have, especially when you're young. Let's break it down and see the incredible potential of consistent long-term investing. Say you start at 20, putting away $100 every month. It might seem insignificant now, but trust me, it's not. Into a simple low-cost index fund, tracking a broad market index, and earning an average of 8% a year. Nothing fancy or complicated, just consistent growth. The first year, you'd have a little over $1,200. Not that impressive on the surface, right? But let's fast forward and see what happens as time starts to work its magic. By age 30, 10 years into your investment journey, you've put in 12 grand of your hard-earned money. But thanks to the power of compound growth, where your earnings start earning their own returns, you've already got close to $18,000. The difference between what you put in and what you have is steadily growing. Jump to age 40, now 2 decades into your savings plan. You're still just chipping in that 100 each month, consistently adding to your investment, but now the line on the chart is curving sharply upward. You see, compound interest snowballs, gaining momentum as time goes on. You've tucked away $24,000 of your own money over those 2 decades, but your account? It's sitting at over $55,000, more than double what you invested. But here's where the magic really happens, where the exponential growth truly kicks in. At 50, after 30 years of consistent saving, your total deposits are $36,000. But the chart? It's taking off like a rocket. Your account is pushing past $140,000, a testament to the power of long-term investing. And finally, at 65, the classic retirement age, what does that seemingly insignificant $100 a month look like after all those years? Over $100,000 of your own money invested, diligently saved over 4.5 decades. But your account? It has grown to over $300,000, providing a substantial nest egg for your retirement. That's 3 times what you put in, a remarkable return achieved just by starting early and letting time and the magic of compound interest do its work. Think about what that really means for your future and your financial well-being. That's a paid-off house, a place to call your own without the burden of a mortgage. That's epic vacations, exploring the world and creating lasting memories. That's freedom from paycheck to paycheck stress, knowing you have a secure financial foundation. All from putting aside $100 a month, less than most people spend going out to eat or on other non-essential expenses. Most people wait too long. They think they'll start next year or when they get a raise, always finding an excuse to delay the inevitable, or when life feels less crazy and they have more time, which, let's face it, rarely happens. But the sooner you start, even with a small amount, the more your money works for you, and the greater the potential for long-term growth. So, what does $100 a month really do when consistently invested over the long haul? It builds the kind of secure and prosperous future most people only dream about, a future where you have choices and control. Start now, even if it's just with that $100. Future, you will be incredibly grateful that you did. Subscribe to Finance Foundation's 99 for more insights and tips on building a solid financial future.